Hey everyone, welcome back to another How To with Ziad. Today we're going to be talking about different ways to structure your business. So we're going to be doing a brief overview of sole proprietorships, partnerships, limited partnerships, LLCs, S corporations, and C corporations.
Yeah, really excited for this new and improved version of How To's. I believe this is actually our 10th episode doing this, which is super exciting. We definitely wanted to switch to YouTube just to produce a bit higher quality of videos for everyone, but that does not mean we are not interacting with you guys. We are going to be posting on Instagram and LinkedIn beforehand to field your guys' comments. Also, once you do see this video, please submit your questions in the comments below. We'll make sure to get to you there as well. And so really excited for our new and improved how-tos.
Yes, I'm excited as well. I can't believe it's our 10th episode already.
I know, it's crazy.
Yeah. But before we jump into things, I just want to make a quick disclaimer, and that's that everything that we'll be talking about should not be taken as personal advice. If you have questions about your situation, please contact your financial advisor. We'll also be talking about different tax strategies, and we are not tax professionals, so also contact your tax professional. We also will be name dropping some different companies just to give you some examples of the ways that they are structured. So we are not at all affiliated with these companies. And with that, let's get started. Well, to start out, a sole proprietorship is the simplest type of business to set up, especially if you don't expect to be taking on that much liability. So that's because there's only one person involved. So this would be a photographer. For the photography business, they are the only person in their company, and they are the only person involved.
Yeah, exactly. This is one of the most common types of business structures. This is for that individual who's just starting their own business, tends to be more of a freelance kind of person like a photographer. The idea here is that when you do start a sole proprietorship, you don't have to fill out any paperwork to set this up. You don't have to jump through any hoops to set up a sole proprietorship. It's already just whatever your business is. And you have ultimate flexibility over how you conduct yourself within that business. You control every decision, every purchase, everything that happens in there. The big thing to note here is that with that ultimate flexibility, you do also have ultimate liability. And so your business account and your personal account aren't separate at all. They're commingled. If you incur any losses in your business, that can bleed down into your personal bank accounts as well. And so say something drastic happens and you undergo a lawsuit and you have to pay in losses there, that's dangerous as a sole proprietorship. But a lot of the times people still find it beneficial to have that ultimate flexibility. Basically one of the most basic business structures.
Yes, exactly. That's called flow through, passing income and loss to owners and investors. Now, similar to a sole proprietorship are general partnerships. It's the same, but it's with multiple people. So if Ziad and I wanted to start a business, let's say we had a bakery, that would be a general partnership. We could also add someone else on because it's two or more people. So we could add our CEO, Ross Gerber, into our general partnership. It's an unincorporated association of two or more individuals.
Yeah, exactly. Nothing much changes here between a general partnership and a sole proprietorship. You still are mingling that business and personal loss, that flow through income and losses, as we'll continue to reference throughout this how-to. Big thing here is just if there's more than one person who wants to get involved and you prefer that flexibility and liability, this is what's going to happen is you're going to have a general partnership.
Exactly. And really considering the objectives of all parties. If you want to invest in a business, but you don't want to be personally completely liable, then maybe a limited partnership is better for you. This is really common with real estate investors. So someone is in charge of buying the real estate, but then the limited partners are helping fund the money to buy the real estate.
Yeah, exactly. A lot of the times you'll find this situation come up when you do need some funding, but you don't want to give up control over your business. And so you'll approach people, let them know, hey, I'm looking to run this business. I am looking for investors. You will participate in the growth, but you won't have control over the business. And so the big benefit here as a limited partner is that any losses are only limited to what you actually contribute. So say you contributed $10,000 to a business. If there was $20,000 in losses that you owe, you only actually owe $10,000. It's not going to trickle down into your personal bank account necessarily. However, the person who is making decisions with the company, with the business, still does have that flow through income and loss, and accounts are still commingled like that. And so just be aware of that as a limited partner, but a great way to get involved without having to necessarily make all the decisions in the company.
Definitely. And staying on that theme of limited liability, we have limited liability companies. So they're a very common business structure, and there's a lot of well-known companies that are LLCs. It's a business that combines the benefits of incorporation with tax advantages of a partnership.
Yeah, this is one of the most common business structures that you'll see out there. A lot of people do want to start a business, but they don't want to risk losing any personal assets. And so they'll simply start an LLC. It's relatively it's easier to set up than other business structures. And the major benefit here is that you do protect yourself from loss. And so you still have flexibility over your investments. You can have as many members as you would like, as many people involved in the company as you would like, and still maintain that kind of flexibility as well. So
exactly. And then there's S corporations, which, although they're taxed like a partnership, it offers investors limited liability associated with corporations in general. So unlike LLCs, which have an unlimited amount of members, S corporations are limited to 100 shareholders.
Yeah, S corporations and LLCs are very, very similar. LLCs tend to be more popular than an S corporation simply because it is easier to set up. It is a lot more flexible than an S corp, but a lot of the times people will be setting up S corporations when their business starts to become more profitable. You'll see it'll happen a lot of the times when you have a startup that is starting to graduate from that startup phase and really bringing in significant income. They want to just save money on taxes here. This is kind of a situation where you want to consult your tax professional on whether it is beneficial for your business.
Definitely. And then we have the C corporations, which are the big guys. It's Amazon, Google, Microsoft, Apple. These are probably a lot of the companies that you're more familiar with, the larger companies. It distinguishes the company as a separate entity from its owners.
Yeah, this is the big one. Like you said, Mia, this is one that most people are aware of. The big thing to know, just to kind of summarize what Mia is saying, you're separating the organization from the individual, right? So everything is completely separate. There is no personal liability when you're involved in a C corporation, but because you have that complete separation, there is tax hits that you have to take on. There is tax consequences that come with that. What happens with a C corporation is they have to pay taxes of their own, corporate income tax on whatever profits that they take on. And then you as a shareholder will then get the profits of that company. And then you have to pay personal income tax on that as well. And so any profits that a C corporation makes, you're going to be double taxed, which is the drawback of incorporating as a C corp. But it still is really beneficial, especially if you expect to be taking on a lot of capital or a lot of money. You expect a lot of money coming in. Your company is expected to be extremely profitable. C corporation is a great way to go. Also, one thing to add on as well as a C corp is there is a lot more regulation and administrative work that comes on top of it. If you are a small business, not a lot of times does it make sense for you to incorporate as a C corporation, although you can. But just a few factors to keep in mind as you set up your business.
Exactly. And so that's a brief overview of different ways to structure your business. If you have any questions, we're always here to help. And we actually just opened a taxes and accounting division for complicated situations that business owners may have, all the ones that we've been talking about in this YouTube video.
Yeah, we are so excited for this tax and accounting division. A lot of our clients are business owners, and we have been looking to find ways where we can help them even further than the financial plan that we already provide. And so they are specialized in helping out with situations just like these, answering questions like, should I incorporate as an LLC or an S corporation? Am I fine as a general partnership or a limited partnership? All that kind of stuff. You know, if you are a business owner and are just curious of looking through your tax returns and making sure that you are saving as much money on taxes as possible, reach out to us. We are happy to help out with that and provide an added benefit.
Absolutely. Well, thank you for doing our 10th how-to with Ziad, and thank you to everybody watching for continuing to watch this series.
Yeah, thank you so much. Have a great week, Mia.
You too, or a weekend. Enjoy the weekend.
Yep.